Welcome back, traders. We're going to follow up on this British pound New Zealand dollar trade that we're looking at. We were focusing on it at first on the daily chart, and we showed you several lines of support and resistance where things have been moving around, as well as this triangle which has now been broken. So we can actually go ahead and remove these lines because it looks like it's been tested too many times, but these horizontal lines are definitely still in play. We can see here that the market broke through quite a bit, returned, it hit this line again, and you can look at the old videos and see that we drew this in long before this happened, and it's been reversing off it now. So keeping that in mind, let's have a look at a slightly lower time frame. So now we're going to look at the 4-hour chart, and we can see here that this pin bar formed. While it's not the ideal pin bar, it does fit into the fact that the body needs to be 1/3 or less of the total length of the bar itself, and to make it a good one, it needs to be bigger than the candle on the left. So it looks like the short pin bar is in play. Now we're going to look at this as a purely technical analysis point, even though you should be looking at the news as well. But just for today, as a learning thing, we're going to be doing this purely on technical analysis, and we're going to go ahead and enter one of our pending orders, just so you can get a bit of practice on that sort of thing. So what we're saying is that this previous line of resistance up here has now come into play again, and we see that the short pin bar has formed. While not exactly off there, we can see that this price level has been tested a fair amount, and so we're going to say that the market is going to continue short. But we want to make sure that there is a bit of momentum coming, so we're going to set a pending order just below this blue candle over here. I'm going to go ahead and mark off the price. This makes life a lot easier while placing the trade. We're saying if it breaks this level, then it should continue down, and hopefully it'll close at about this level. As for the stop loss, we are going to put the stop loss at the tip of this tail over here, just a little bit above. So if the market comes up and breaks this level, then we know that this pin bar is no longer valid and should not be used. So that's why we have our stop loss there. Now we're going to measure from our potential entry to stop loss, and we see here that it's 125 pips, which means we don't want to be trading a large amount of money. We want to keep our volume relatively low on this one. So let's go ahead and enter this pending order now. I'm going to go ahead and select new order. We're going to go from market execution to pending order. Now, if the market is above and we're saying it's going to go down and continue going down, that would be a sell stop. So we're saying that we're going to set a price level here. When the market hits that level, we're going to enter a sell position, and then it's going to continue down. This is one of the reasons why I put tags across here is, as you can imagine, having to kind of guess where you're going on the side here can be a little tricky. When you have the price tags put in, you can see exactly where you're going to be placing it. So we can go ahead and type in that value here, 1.9331, let's make it 5. The volume on this trade, I'm just going to enter a 0.2 volume there because I do know that the stop loss is quite far away. We don't want to risk too much money on that. The stop loss, we have a tag there, so we're going to say 1.94550. And the take profits, we're going to be targeting this. However, we will be checking in on the trade. So if it does trigger, if we do go into a profitable zone, we look in and we see if anything else has changed our mind as to why we should close it. But if you were to just walk away from this trade, then you go ahead and you put in take profits and then come back whenever you can, and hopefully you've hit it. So they have entered 1.91980. Now, okay, the sell stop cancelled, so let's just type this in again. And now I'm going to go ahead and hit place. Now we will have our different lines drawn in. The line in this bottom green is hidden underneath this because we set it to the same value. But if you have a look at the end of the screen, you can see here that we do have the, this is the number of the trade, and it's saying it's the take profit by TP. We can see the dotted green line for the sell stop that we've set, and the red line for our stop loss. So now the idea is that we've looked at this trade, we've made a decision, we've entered everything, and we can now walk away because we're not actually in the trade yet. Only if the market comes and crosses this line will it enter the sell position, and it'll take profit here. If the market shoots up to this after entering, then we'll hit our stop loss. If it never crosses this line here, our sell stop, let's say the market just skyrockets straight up from here, then we never enter the trade and we don't lose or make anything off of this. That, in short, is how a sell stop works. I'm going to do the same thing except with a sell limit. We're going to say that if the market comes up to this point here, then we expect it to turn and come down again. If you remember the last video, we were looking at approximately halfway through the candle. We can go ahead and set a different pending order. That's what we're going to do now. So I'm going to put down my price level there so we can use that information. And again, we go to new order. We select pending order. We can use the same stop loss value as we had before. We can use the same take profit. And then the only difference is when we're going to be having our pending order. Here we must just select sell limit, and then we set the price here. And I took that from this value, and I'm going to go ahead and place this now. So the market is in the middle. It hasn't touched either of these prices, so we are still not in a trade. And the difference between the sell stop and the sell limit is, first of all, we're trading in the same direction, so that's the similar part. The difference is that a stop means that we expect the market to continue in the direction, whereas a limit expects the market to change in direction. So we're saying that the market might come up, hit this value before turning down again. That's the difference between a stop and a limit. If you look at the buy options, it's exactly the same idea. If we were to hit a buy on this point, we would have our buy stop above because we are saying that the market will move up and continue in that direction. Whereas we would have our buy limit below because we are saying the market would first come down, hit that point, and then turn around. So just remember, a limit is when we're expecting the market to continue in the wrong direction for a little bit before turning, and a stop is when we expect the market to continue going in the direction it is.